Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, July 26th, 5:24 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we continue to be in an uptrend, no change to the trend gauge, leaders acting fine. As far as the indexes go, all five of the major indexes that we cover in all three of these videos are trending above their short-term 21-day moving average, medium-term 50-day moving average, and long-term 200-day moving average. Uh, this is pretty summed up pretty quickly. This is a healthy market, folks. We're taking advantage of it. Our flagship portfolio is named GROTECTION, is designed to grow our clients' assets in an uptrend and protect them in a downtrend. We took care of the protection part last year, and we're reaping the benefits of having that dry powder to put to work in a healthy market. So what happened today? FOMC raised 25 basis points, as was basically 100% guaranteed. They don't tend to go against what the Fed futures markets are predicting. So kind of a muted reaction to it. Really the tamest reaction I recall in a while. Down a little bit, up a little bit, settled basically unchanged for the S&P. NASDAQ 100 lagged. Banks led big time on the day. Bank of California buying out PacWest. PacWest was actually down 30% yesterday. Then this morning it was up 30%. So a bit of a crapshoot there, but the bottom line is that KRE, the retail bank, regional bank index, up 4.7%. KBE, the larger bank index, up 3.72%, and that led the small caps to the biggest gain on the day of the five major indexes. Here are the final numbers. RG8, this is our 8 growth ETF composite, up 1/3%. S&P 500 just barely negative. NASDAQ 100 down 1/3%. Dow Jones Industrial Average, like 12th or 13th straight up day. It's setting longest since 1987, in fact, up 0.23%. Mid caps up 0.5%. Russell 2000 up 0.7. Global Diversified 60/40 up 0.16%. Both stocks and bonds up slightly. In-house protection just down a smidge, down 0.02%. Let's dive right into the charts, followed by the tail of the tape, and then some individual names. We start off with the indexes, as always. The S&P 500, you can see. Let's go to the 5-minute daily chart. Tight range as usual. I mean, 13, 12, 13 points, 1/4% into the Fed. Here was the initial reaction. It was up, then it was down, then we got a little bit jagged after the press conference started, but really with a low of 45.47 and a high of 45.82, less than 1% really on a Fed day. That's kind of amazing. So you can see the spike up, you can see the spike down, you can see the recovery. Bottom line was unchanged for the S&P 500, and we continue to trend very nicely above the 8-day exponential moving average. Excuse me, holding this breakout above the 45.60 level. Let's go to the NASDAQ 100, formerly the leading index, now somewhat of a laggard. Well, we won't call it a laggard, but we will say that it's basically kept pace with the S&P 500 since May 25th here, and you can tell that even though the chart looks fantastic, you can tell that by our best friend, the relative strength line on the chart here. You can see net. It's gone sideways going back 2 months now, which is kind of what we were looking for as we got a little bit too extended on the upside. NASDAQ 100 taking a little bit of a relative strength break, allowing the moving averages to catch up 1.1% above its 21-day moving average, 4.8% above the 50-day moving average. Even here, last pullback to the 21-day moving average, well, let's go 2 pullbacks ago, it was still 6% above the 50-day. Last pullback, 5.7%, now 4.8%. That's the reversion of the mean that we've been looking for We said it could happen through price or through time. I explained last night how it's really been a combination of the two. But we are seeing it, and that's just something that death, taxes, and the market reverting to the mean are three things you can always count on in life. Let's go to the Dow Jones Industrial Average. Look at that nice uptrend, all those days higher, up 0.23% today. Just has taken off since this breakout above the 34,600 level. On a relative basis, going sideways for about the last four sessions. So although it looks good, it's just keeping pace with what the S&P 500 is doing. Let's go to mid caps. Mid caps, nice 1, 2, 3, 4, 5, 6, 7 day tight consolidation here after the move up. Bulls are just looking for this breakout above this 500 level. You can see we've got it flagged there. 499.41 today, so uh, 7 cents short of this high over here in February. Let's see if that can break above tomorrow. And then finally, IWM small caps. You see I've got alert set above the breakout. Again, another nice consolidation going on here. Banks led to the outperformance today, up 0.8% on the day. This is why we've got those green arrows on the prior screen. It's a combination of strong leadership and strong indexes, which is the perfect combination that we like to see as investors. As investors that manage risk based on the health of the market, markets don't crash from all-time highs. Forget about the fear mongering that you hear about the macro. Pay attention. Stop telling the markets what to do and start listening to what they're telling you, would be my advice to anybody that hasn't participated in this uptrend. Here's the VIX, closed near the lows of the day, reversed at the declining 21-day moving average. This is a healthy look for the VIX. That's what we want to see. Let's flip to the dollar. Dollar sold off after the Fed. You can see here down a little bit of a spike, sold off after the Fed. Go to the daily chart. This is, a positive setup. We talked yesterday, I believe it was, about how it got up to the lower level of the prior um, consolidation. Would that act as resistance? And so far it has. That's where we reversed yesterday. So it brought us back into this lower level consolidation. So it's at the top of the lower range. This is bullish. Stocks, despite 5 up days and 2 down days, have been going higher. Good setup here for the bulls. Let's go to precious metals. A little bit of a divergence here on between the metals and the metal stocks today. GLD, nice day, up 0.5%. SLV, silver, up 1.3%. Nice day there. Gold stocks, however, not a good day. Tight inside day. Let's just say they continue to rest here right above these two key moving averages. Nice little platform that it's setting here for a potential blast off. There are a couple of big gold miners reporting earnings today, so we'll see how that impacts things tomorrow. But down 0.4% on the day. Bitcoin, BITO, continuing to trade in a tight range, broke below the 50-day moving average. Let's see if this is a bear flag as it comes into the bottom of this range and fails and goes lower. But the miners themselves are acting just fine. Let's go to the bonds now. BND, across the board, bond prices were up, meaning bond yields down. See prices closing at the high of the day, up 1/3% on the broad bond index. TLT, not up as much. So some changes in the curve, up 0.10%, not at the high of the day. So let's go to TYX, the 30-year. Remember, these close at 3 o'clock. So that last hour after the Fed can throw things off a little bit, but down 0.7 on the yield. TNX, the 10-year, down 1.6%. On the yield. So pretty big, closing at the bottom of the range there. And this several ranges here, but the bottom line with yields is that we broke above this 4% level 3 weeks ago now, and it was a failed breakout. Let's see if we approach that level again or if we roll over. We don't make any predictions. We just take a look at the charts and tell you what's happening and interpret that as bullish or bearish and good or bad for stocks or commodities. That's all the inter-asset correlation we do in every video. Let's go to the tail of the tape now. Stochastics mixed. NASI RSI was flat yesterday. Dollar bullish. Rates in range. Will get updated bull bear levels tomorrow from AAII. So FOMC 25 basis points up as expected, and now they're taking it data dependent, meeting by meeting. Powell said some dovish things and some hawkish things. Said that he certainly wouldn't expected to be cutting rates this year. Whether or not they raise them is dependent on the data. He said we may have to stay at it long. High rates may have to be higher for longer. They're really taking it seriously about sticking it to inflation. So inflation data and various economic data will depend what happens with rates through the end of the year. As far as earnings go, Meta up nicely after hours, about 6%, 7%. Tomorrow morning, we've got some inflation data before the market opens. The day count, 5-day consolidation now, day 37 of the uptrend, 12th day above the ADMA, 42nd day above the 21-day moving average. Picture the bull on the surfboard here, not knowing how long the wave is going to go. That's where we are right now. Let's see, sectors today. Banks, K-Web, China sporting a bit of a rally the last couple of days. Transports up, gold and silver up, dollar down, tech down, gold and silver stocks down, semiconductors down, and software down. In-house of the portfolio, added two positions today, MDB and ONON. We'll take a look at those charts. And then these are some other significant charts that are in focus that we'll discuss today, and we'll highlight the portfolio. The bottom line for today, a muted reaction to FOMC. NASDAQ 100 lags, banks lead. Let's see what tomorrow brings. Often the Thursday and Friday after FOMC are known for throwing curveballs as it takes overnight or a couple overnights sometimes for the market to determine what its interpretation of what the Fed does to their models and what action they're going to take. So let's start off with the two things that we bought. Both were in the 21 over 21. That's right, we eat our own cooking here at Revere. Most of our buys come out of that 21 over 21 list. MDB, early sell-off in line with Microsoft, undercut the 21, reclaimed it. When it reclaimed it, we took a small position, a starter position here. Very clear stop out below today's lows. And then ONON has shown some serious strength lately. We took a position in this on the bounce off of the ADMA and reclaim of this prior higher level, just barely above the pivot plus 5%. Level. So those were the two that we gained. Let's take a look at other highlights in the portfolio today. There wasn't really much of them. It was kind of muted. In fact, there's really not any charts worth looking at, as everything was either up or down less than 0.5%, kind of in line with what you saw with the muted reaction to the markets. One sector chart that we're looking at, SOX, hanging around that 410 level, which is the 510 level, which is the 21-day moving average, undercut and reclaim that today. So let's go to the charts now, that the non-holdings that were in focus, and let's start with Boeing. This is a big volume breakout by a big stock after an earnings miss. This is like an 8-month base. If you take it all the way back to here, you could draw the line further back, in my opinion. But anyway, up 8.7% on 380% above average volume, clean breakout from a long base. Now, the question is that we always ask ourselves, can Boeing do double what the S&P 500 is going to do? And I want to look back to several earnings reports ago. On 10/26 of 2022, they missed earnings and the stock dropped 8.8% on 3 times average volume. 5 days later, they held an investor. They did an investor day, and they announced that they would be cash flow positive sooner than they originally thought. Now, why they didn't say that 6 days prior at the earnings report, I don't know, but the stock took off after that. It was up that day. Let's see, it was up 2.8% that day. The next day up 6.3%, and it went on a very nice run, riding the 8 and then the 21 higher, climbing from 160 up to 216. That's a pretty nice return. And if you look at the relative strength line, it certainly did twice what the S&P does. So the potential is there if you catch Boeing at the right time to get some good returns. The question is this the right time? And we're going to watch the reaction over the next couple of days to determine if this is worth having a place in the portfolio, but certainly good action today. Google, positive reaction to earnings, gap up, break out of this short cup and handle, closed in the bottom third of the range, made a new high above this 129 and then pulled back slightly. Good. Almost double average volume. It's had some money flowing into it, as you can see, 3 of the last 4 days. But that also has given some false starts. Uh, you can notice here this nice 4-day uptrend, and then in 5 days they gave it all back. Basically, they started the day around the 50-day moving average. You can see what the move is. Not likely that I'm going to take a position in this. Uh, from my studies of Google, you're better off owning QLD than Google. Plus, look at the relative strength line. That's just not where it's been. It's been the weakest of the big 7 all year. Microsoft, down on earnings, bounced at the 50-day moving average. Very nice low risk entry there, in my opinion. But it was down on big volume. So can it do? Is this a low risk entry point? Yes, it is, with a close below either the today's low, which also coincides with being slightly below the 50-day moving average, or if you wanted to give it a little bit more room, you've got this 327 low from a couple of weeks ago. Can this do double the S&P or double the Nasdaq 100? I don't know. I don't think I plan on buying this right now. I think QLD would be a better spot. I don't think it will do double the Nasdaq 100. Microsoft, let's move from there to a security stock that had a good day, not one we've talked about before. Tenable Holdings, up 10% on 300% above average volume. You can see we've got our typical highs of the range and lows of the range alert set. It did clear above this 47.72 prior high, and it held it. The volume certainly there. The group's not bad. It's a B. It's a B plus. But add this to the list of 5 stocks that we talk about frequently in the group, the software security group, and we'll see if it can outdo those more commonly and more liquid stocks going forward. Over to oil and gas stocks. Remember the 21 over 21 Weatherford, up 3.8% on 180% above average volume on its earnings. Good stuff. The bad part is that this has just reached the pivot plus 20%. The good part is that it did it after a pullback to the ADMA, and it did it on earnings, so somewhat of a catalyst there. And the numbers look pretty good here with something that has a PE of 22, earnings this year, huge earnings growth, and still 32% next year. Anytime you are looking at a stock with a PEG ratio of less than 1, you cannot say that there's a valuation issue with it. Not that we put that much stock in that, but it is good to see, and really good reaction since it had this breakout 3 weeks ago. So you can very clearly say that Weatherford is a leading oil stock. It was good to see the good reaction of it today. Let's go to Meta, which reported after hours. As I said, up 6.4%. That's putting it at 318. That's putting it right near the recent highs of a couple of last week, middle of last week. So nice move for Meta. And then another 21 over 21 stock that we wanted to monitor because of the story, ENVX, up 5.5% after hours. Now up 6% after hours, bouncing off the 21. This is they make high energy density silicon lithium batteries, which have a minimal chance of fire and overheating. And they've signed some very impressive clients lately. Let's see. I will have to read about some of the updates from the conference calls. I know some pretty smart people that are in this that think a lot of it, and this is a pretty low risk entry point, up 6%, considering that it was 2370 just last week before they reported earnings. So we'll see how this shakes out tomorrow. And that's going to wrap it. As always, I'd like to hear from you. The email is don@revereasset.com. My partner, Dan Stewart, if you're interested in info on becoming a client, dan@revereasset.com, or call us at 855-REAL-WEALTH. That's 855-732-5932. Remember, it's not how much you make in the market, it's how much of that you can keep. Our goal at Revere is to take when the market is giving, but not to give back when the market gets to taking. And that's our goal. Risk management, our number one job. The returns take care of themselves when you protect the downside. And with that, I'm going to wrap up today's video for Wednesday, July 26th. This is Don Vandenbord with Revere Asset, telling it like it is. Thanks for listening and have a great day.